Hi guys, I'm Divya Chaudhary. I'm a chartered accountant and a net qualified assistant professor. I'm based out of Mumbai and I'm here to get your accounting concepts strong and clear. I'm here for everyone and anyone who's trying to understand accounts, whether you're a commerce student, science student, or you're pursuing MBA, or you're from any other educational background. I'm here for each one of you. We're going to focus a lot on conceptual understanding, so I hope you'll have fun learning with me. I'll be sharing my screen now, so please take notes wherever you feel necessary. The topic that I've chosen for this video is basics of accounting, which includes three golden rules for accounting. Right? If you'll truly understand these rules, accounting as a subject will be a lot easy for you because if you understand these rules, journal entries will make sense to you, and journal entries is literally the base for anything that you do in accounts. All right. So, having said that, let's start with the basics of accounting. Why do we need accounting? It's the first question. So, accounts, we do accounts in our daily lives also. It's just that probably we do it mentally, right? Let's say if you get pocket money or if you have some income, you try to keep mental tabs of where you've spent, how much you've spent, and how much is left. But for a company who has probably 1,000 crores as income, 10,000 crores as income, it becomes difficult for them to keep mental tab of how much they've spent, where they've spent, and how much is left. So they say start writing down all the transactions. So recording of transactions is accounts, right? Now, my second point is, do I record only monetary transactions or non-monetary transactions as well? Non-monetary transactions are what? Let's say if you have shown love towards someone, is that monetary? Can you value it in terms of money? No. So non-monetary transactions are not recorded. Only monetary transactions are recorded. What is monetary transaction? Anything that can be measured in terms of money. Monetary transactions are recorded in the books of accounts. All right. Now let's take the next pointer. That is, if you go to a shop to buy a pack of chips, can you just buy that chips and get done with it and get out of the shop? No, right? If you buy the chips, you will have to make a payment. So any transaction will have two aspects for it, a give and a take. Yes or no? When you're taking a pack of chips, you're also making a payment to the shopkeeper. The next pointer is, if the pack of chips is for, let's say, 20 rupees, how much payment will you make to the shopkeeper? Less than 20, 20, or more than 20? If there's no discount, nothing going on, how much will you pay to the shopkeeper? If the pack of chips is for 20 bucks, you'll pay 20 rupees, right? Next thing that I want to highlight is the give is equal to the take. Agreed? In accounts, of course, the name, give, and the take changes to something else, but we have understood the basic that a transaction will have at least two items involved in it. You'll take something and you'll give something, and how much ever you're taking, you'll be paying equivalent to that. Okay. Now, with these things, we come to our accounting terms. The give and take in accounting terms, the items can be classified into either of these three accounts. First one is real account, personal account, and nominal account. All right. Um, so any item of a transaction can be either classified under real account or personal account or nominal account. That is what we have to learn. That what items come under real, personal, and nominal. Under real account, these are basic classifications, right? Under real account, anything that you can see, feel, touch will come under real account. For example, can you see your phone? That's a real account. Laptop, TV, fridge, machinery, anything that you can see, feel, touch will come under real account. Is cash a real account? Can you see, feel, touch cash? Yes, right? So cash is also a real account. What comes under personal account? If any name is involved, that could be an individual or an institution. What does an institution mean? For example, HDFC Bank. It's an institution, right? Individual is us. For example, Virat Kohli is an individual. If you were to do any transaction with Virat Kohli will be classified in personal. And lastly, we come to nominal account. What comes under nominal account? Any services will come under nominal account. What does that mean? So, for example, you want to travel from place A to place B and you're taking a cab for it. Okay, so you've sat in the cab and reached your destination, point B. While getting out of the cab, you pay that person, right? You're paying cash. Cash is a real account. But in return, what are you getting? So every transaction has a give and a take. You're giving cash, but what are you getting? Are you getting anything that you can see, feel, touch? No. Are you getting the driver itself himself? No. So what are you getting? You're getting a service. Any service involved is classified as nominal. For example, let's take another example. Rent. Let's say if we are staying in an area or we are paying office, we have an office on rental basis. At the month end, after we are done paying the rent, do we own the property? No, right? We are giving cash, but in return, what are we getting? We're getting the service of utilizing that space for the purpose that we have agreed on. So rent is a nominal account. Salary is a nominal account. These are a few examples. You can also say commission. So that's how you classify items in real, personal, nominal. What are the items? The give and the take of any transaction are the items of the transaction, and we try to classify it in real, personal, and nominal. So from today onwards, any transaction that you do, even at home, you can try to find out what are the two items in any transaction and try to classify them in real, personal, and nominal account. All right, now quickly, let's get back to three golden rules. These golden rules belong to the three accounts that we have just understood. The golden rules for real, personal, and nominal account. What's the golden rule for real account? Okay. For the golden rule, there's a language which you have to understand. We have understood that give is equal to take, but in accounting language, what do we call the give and the take? One leg of it is called debit and the other leg of it is called credit. So one item is debited and the another item is credited. Okay, your golden rules are based on this language. Let's have a look. Real account, the rule is debit what comes in. I hope you all are writing somewhere. Please do. Credit what goes out. Just quickly write them down first and then we'll also try to see a couple of transactions. Personal account, debit the receiver and credit the giver. And finally, nominal account, debit all expenses or losses, credit incomes or gains. All right. So how does this work? In any transaction, you will try to find out what are the two items involved and then classify them on these basis. Let's have a look. Case laptop is 50,000. This is the transaction that is given to you. Okay. We are going and purchasing a laptop and paying cash. What are the two items involved in the transaction? We are taking a laptop and we're giving cash. So underline those two items, laptop and cash. Now laptop is which account? Real, personal or nominal? Can you see Feel Touch laptop? Yes, that comes under real account. Cash, can you see Feel Touch cash? Yes, cash is also a real account. What is real's rule? Debit what comes in, credit what goes out. Cash, real, same rule. Please write it down. Debit what comes in, credit what goes out. So now you have to think from your point of view. Is laptop coming in or laptop going out? Laptop is coming into the business and cash is going out of the business. So your debit is laptop and credit is cash. And you're paying cash of 50,000. So your debit is equal to credit. You have your match. And when I say you have your match, can any transaction have two debits only and no credit? There's one give and one take. So therefore, one debit and one credit. Your debit has to be equal to the credit. Okay. Let's take another example. Let's say paid rent of rupees 10,000 cash. What are your two items of the transaction? One is cash and one is rent. Cash, as we just saw, is real account. Real's rule is debit what comes in and credit what is out. And rent is what? Is it real? Can you see if you touch rent? No. Is it personal? Is it someone's name? No. Come down to rent as nominal. It's a service. Nominal's rule, debit all expenses, losses, credit all income gain. Now, is rent an expense or an income here? How do we come to know that? From the word paid. You are paying, right? So if you're paying, it becomes your expense. So rent is your expense and cash is going out of the business. You have your match. One is credit and one is debit. So that's what you have to do with any transaction that you face. You have to try and find out what are the items involved in the transactions. One, the items are identified. You have to classify those items amongst real, personal, or nominal. Once that is done, just quickly apply the rule and find your match. A debit will have a match of credit. It can never happen then that there are two debits or multiple debits and no credit, or multiple credits and no debit. If that sort of thing is happening, try to redo the exercise and you'll find a match. All right. So with this, we'll stop today and see you in the next video. We'll do more of journal entries that time. Thank you so much, guys. Bye bye. Have a nice day.